Good morning, traders. It is Monday, December the 11th. Taking a look at the charts, we got the SPY ETF here. You can see our cycle analysis shows we're getting into some chatter here where we've had the majority of the upward swing, and we're kind of going to be fighting a sideways to downward bias. Now, keep in mind, cycles don't mean the price is going to fall down to these levels by any means. All it means is we've got this trend line going up, this 20-day moving average. That gives us a good feeling of the trend direction. When we have counter trend action, where these cycles are kind of moving against, all it means is these strong runs where the trend and the cycles are in favor, these strong rally modes. Once we get into that, we start to get into very tight price range. We start to get in price kind of chopping around and doing the grind until the markets reset, and then you've got the trend moving up and you've got the cycle moving up, and that's when you get these strong surges. So we're getting into that mixed cycle where the trend is up, but the cycle more or less, the overall majority of cycles are kind of pulling sideways and downwards. So we're going to get into potentially the market kind of chopping and grinding higher into the holiday season. Maybe I'll just trade sideways, who knows? But the overall trend is up. It's just the big, strong rally moves, I think, at this point are done until the market resets somewhere back down over here. But again, each week the cycles kind of update to the most current active cycles, both daily chart and intraday, and kind of get blended together. So overall, stocks are trading higher. They're relatively flat today, but they're trading up near the previous high where we had two big up days here, and we could run into a little bit of resistance over the next couple days here as the market kind of chops around. Now, typically when we get into this area here where we see cycles kind of moving down and price starts to chop and grind its way higher, we get into these counter trend moves. This is usually when we see the safe havens start to pick up a little bit of investment capital and start to firm up. So here we are again getting into this kind of level where the cycles are kind of fighting and the market's chopping around. And if we go and we look at gold and silver, we've been kind of watching this for a while, waiting for this move down. We've been watching it since back over here when it kind of topped out. Gold is pretty darn close to a low here where we should see some type of pop. It may not be a huge rally up to here. It could just be a strong bounce back up into the mean here, into this 1280 level. But overall, we're getting to a level here where we should start to see some type of pop, just like we've seen these other cycle lows here, pop and another pop and rally. So that's kind of where we are in terms of precious metals. Silver, very much the same. Let's come down to our measured move. We're more or less at a cycle bottom here. We should see some type of relief bounce. If we look at gold miners at GDX, same type of thing. We're pretty close to the low here where we should start to see some type of relief rally. And again, it doesn't mean its price is going to rally up to here by any means. It just means we could see price more or less pop and have a quick relief into this kind of resistance zone where price is chopped around and consolidated, because it is technically in a downtrend here. You can see our red moving average. It is trending down. We've got lower highs, lower lows. So this here is going to be resistance right through this consolidation, and that could be the reaction high that we see going into the holiday season for precious metals. Looking over at crude oil real quick. Here is the chart of crude oil. We are getting into that more or less cycle high. We've got downward bias. It's continuing to consolidate. We might see it chop around and base out here for a while, for a week or so until we get this low, and then we've got a nice move to the upside. We've been talking about this for a while, that we're looking for this 62 level, this horizontal blue line from way back on the chart in 2015. That is going to likely, the market's going to try and pull up to that level. The market loves to tag those levels, probably breach it intraday or for a day or two, and then we could very easily see the market roll over. So we're waiting for this probably this final push that could take place somewhere over here, end of December, January, before we see a strong potential pullback and for us to start chopping around in a much larger range and more volatility once that key resistance level is tagged. Last but not least, this is the VIX, and you can see here the VIX has come down. It's been testing this blue line, this low. It's hit it several times here. Each time it hits it, we get a pretty strong bounce. This blue line is a long term. We saw this level hit back in 2007, several months before the bear market started. We're back down to this level, and you can see here more or less with the markets the equities market cycle is kind of showing downward bias. That goes to show there's some fear in the market. There's going to be a little bit of fear creeping into the market, meaning the VIX should rise up, which is one of the reasons why we should see precious metals move up as well. They're kind of a safe haven during fear time. So we're looking for the VIX to kind of rise up over the next week or so as the market grinds and chops its way, likely higher. But money will be flowing into the safe haven plays and giving them a little lift, including the VIX from the looks of things. Anyways, that's it for this morning. Talk to you in a little bit. Bye bye.